So really hope that you take notes for this, you apply it, right? Because this is a powerful concept that will help you to either get good trades, at short the market at the high or buy at the low, or it helps you to manage your trade. Let's say you are doing a trend trading trade, you're trend following, and you have a long position and you want to know when to exit, you can use this Dow theory as well. Okay, so I really appreciate you could just take 3 seconds to like this video, help us to reach more traders. As you can see, we do a lot of videos like that to serve you, right? We are very unselfish in sharing with you the knowledge we know. So really appreciate you just take 3 seconds to like this video, hit the subscribe button and turn on the bell icon, okay? So that you will not miss a video from any other videos that we create, right? That will help you become a better trader. We also have a free day trading guide, so just make sure you download it. It's free, no cash, no credit card required. Just download it, the link's in the description. So let's go into today's video. So let me convince you why you need to learn trend reversals, even if you are not trading counter trends, right? If you watch our other videos, we always say do not trade counter trend. But this is why you still need to learn trend reversals. So typically, a lot of people think that when it comes to trading reversals, they think that it's like this. Price is in an uptrend and you are trying to short at the top. So this is what a lot of people think about when they say trading trend reversals. But in today's video, I want to show you another perspective. And that is even in a with trend setup, okay, in this setup over here, let's say the trend's up, okay, even in a with trend setup, what you are still looking for is you are still looking for a retracement. So let's say you are in the uptrend and you want to buy up. You expect price to go up. You still need to wait for a trend reversal of the counter trend. Basically, you want the counter trend to change back to a trend. So in this case, this portion over here, you need to time your entry well so that you are able to get in at the right time and with a good stop loss and tight stop loss that help you make good money. So in this case, you are still looking for a trend reversal, but in this case, you are not looking for a trend reversal in this case where it's it's against the trend, but you are looking for a trend reversal of the counter trend. So this is why you still need to identify, you still need to learn how to read trend reversals. Okay, again, I'm going to repeat, I'm not saying that you want to look for this kind of setups where trend is definitely against you and you're trying to short at the top. I'm saying that even in a with trend setup like this, you want to look at the counter trend as price retrace down. Try to identify when the market has changed, something like this. Let's say the price comes up, comes here, form an inverted head and shoulder, left shoulder, head and right shoulder comes back up, and then you start buying. Okay, so this is why you need to learn. So let me show you the 2 ways that you can do. You can identify these trend reversals. Now, strategy number 1 is called break of structure. If you read our free day trading guide, we always talk about identifying market structure. A lot of our videos, we say that market structure is the first thing that you do whenever you analyze a chart. Okay, I don't care which strategy you apply. It could be day trading, swing trading, it doesn't matter. This is the first thing you want to do. So what do I mean by break of structure? So suppose you are in an uptrend now, and uptrend is defined by a series of higher highs. So you have a high here, you have a higher high, okay, I just call it HH. You have a low and you have a higher low. So this is the definition of a uptrend. Okay, if you are new, this is the first video you are watching, we have all this covered in the free day trading guide. So just get that if you are still confused. Now this is an uptrend. So when does the uptrend stops, or when is there a telltale sign that the trend is about to reverse and we are no longer in an uptrend? Very simple. When price breaks this higher low. So price makes a lower low instead of a higher low. Instead of doing this, it comes lower. Okay, so if it makes a lower low, this is the first telltale sign that the structure or market structure has been broken and we are now in a downtrend. Of course, this sometimes what will happen is that price might come here and then it comes back up and it starts resuming its uptrend like that. But in most cases, if it comes, make a lower low and you see that it comes up and it goes back down and it breaks this again, then you are officially in a downtrend because you have a low here, you have a high, and you have a lower low. So this structure has been broken and you are now in a downtrend. Of course, the opposite is true. I'll just run it through quickly. Let's say you are in a downtrend and this is a low, this is a lower low, this is a high, this is a lower high, and instead of price making a lower low and lower high, it comes up like that and it makes a higher high, then this is the first telltale sign that the market is about to reverse, the trend is about to reverse. And if it comes back down, what you can also see is that it's kind of like a inverted head and shoulder, or depending on where the market stops. If it stops somewhere here, there's inverted head and shoulder. If it drops further, then it could be a potential double bottom. But this is the first telltale sign. And of course, if price goes back up, and this becomes a high, and this becomes a low, and this is a higher high, then you are officially in a uptrend. So let me show you a chart just to illustrate this. So right here we have a high. Okay, just exactly like how I drew it just now. It's just the same thing, just that this is in the charts. This is a high, this is a low, this is a higher high, and this is a higher low. And it makes another higher high. But this time, watch what happens with this low over here. It makes this is a higher low, sorry, let me just write it properly. Watch this low over here. This low is actually lower than this. So you can see that this is a telltale sign that the trend has changed. In fact, if you see this and you look left, this is kind of like a left shoulder, this is a head, and this is a right shoulder. It's kind of like a head and shoulder pattern, which is a reversal chart pattern. So this is a telltale sign that the market is going to reverse, the trend is about to change. And in this case, price carries on to break this low, and what you have is it becomes a low here, this is a high, and this is a lower low. So this is how you identify a possible trend change. Okay, as I mentioned earlier, regardless of whether you want to identify a trend change, in this case, let's say you bought somewhere here and you want to exit here, or you are trying to enter in with the trend trade setup, you need to know how to identify this. So if there's something not clear, right, you're not too sure about how to apply this strategy, there's something that I'm not too clear, firstly, I apologize. If not, please leave a comment down below, right? Just get your questions clarified. Write to us, email us, let us know if you need any help. Okay, we always read your comments. So if you need any help regarding any of these concepts, just leave a comment down below. Okay, that's strategy number 1. Now, strategy number 2 is the powerful concept which you will not find anywhere else. Okay, this is called the Dow theory. Okay, if you study the theory, like let's say you read books about Dow theory, you will find something like this. So there are basically 6 tenets of Dow theory. This is found on Wikipedia. Okay, I just did a quick Wikipedia search for you to show you what you'll find on Wikipedia. But what happens is that all these are theory. It doesn't teach you practical things. And as we mentioned, this channel is all about giving you practical, actionable strategies that you can use. It's not just theory. We don't just want to talk at you. We want to give you actionable steps that you can do, you can apply to improve your trade. So if you look at this Wikipedia and find out what the Dow theory is, you will notice this portion over here, and this is the portion that we are going to use to identify a trend change. Okay, I'll just read it to you. It says over here that the medium swing or secondary reaction or intermediate reaction may last from 10 days to 3 months and generally retraces from 33 to 66% of the primary price change since the previous medium swing or start of the main movement. Okay, so the key is 33% to 66%. This is the key. So let me show you how do you use it. Okay, I want to give you the instructions first, the step-by-step guide first. Then I will switch to the chart to show you how I use it in real time. Okay, step number 1 is that you want to use the Fibonacci retracement tool, and you want to make sure that you have the golden ratio, which is a 0.618 level in your Fibonacci tool. This is what we will use as a gauge about whether the trend is going to reverse or not. Okay, if price is supported at 0.618, then we can say that okay, the trend is not ready to reverse, it's still likely to carry on this trend. But if the 0.618 level is broken, then that's a telltale sign that the trend is weakening. You might potentially see a trend reversal. Then the next thing you want to do is you want to grab this Fibonacci tool and use it from the recent swing point. Okay, again, I'll go into the chart to show it to you. And I also have a pro tip over here. If you're new to trading and you can't really identify swing points, you can't really identify which are the swing points that you should be using, then you want to switch to the line chart. Okay, the line chart will show you precisely where you should be focusing or where you should be drawing the Fibonacci tool from. So now let's go into the charts, and I want to show you how to do it. So this is TradingView over here. Okay, it's a free platform. You don't have to use TradingView. You can use any platform. But in this case, I just want to use the TradingView because it's the fastest. Okay, so the first thing you want to do is you want to pull out the Fibonacci retracement tool. So what you can do is just come over to here and you just go for the Fibonacci retracement. So if you were to draw it, you can see that there are many levels. For the purpose of this video and how to use Dow theory, you just want to be focusing on the 0.618. But in this case, I'll just leave the other values on. So what you want to do is you want to find the recent swing point. Okay, so let's just assume that we are looking at somewhere here. Okay, so you can see that euro dollar has been in the uptrend for some time. Okay, it's quite clear that we are in the uptrend. So you can see this is a swing high, this is a swing low, swing high, higher low, so on and so forth. Okay, so we are in the uptrend. So has this uptrend been, is there a sign that euro dollar is about to reverse? Let's draw the Fibonacci tool. So as I mentioned, you take the recent swing point, you can take here to here, drag it up. Okay, let me just zoom in. And yes, you can see that the 0.618 level, which is over here, has been broken. So this is a telltale sign that the trend has changed. Okay, so earlier, if you were to go back into history and you see over here, and you draw it, you can see that it slightly broke it, but in the end, it went back above. So you can see that this is not entirely foolproof, but it's a good gauge to tell you if the trend is changing or not. So moving it back over here, let me just get it right. You can see this 0.618 level is broken. So there are two ways you can use it. Okay, you can use this. Number one, let's say you enter a trade somewhere here and you're in profit and you want to know when to exit. You could have exited somewhere here when you saw that the 0.618 level is broken. Okay, the golden ratio is broken, then you can exit. Okay, that is one way you can manage your trade. You can use it as a trade management tool. The other way is that, let's say you were thinking of buying, but you see that this level is broken. Then you might want to lean towards the reversal side, where you're actually looking for a sell instead of a buy. So this is a very powerful tool. There are really many uses you can do, ways you can use it. Depends how you want to use it. But the way I like to use it is just to tell me if this trend is healthy. Should I be buying with the trend trade, or should I be looking for a reversal? So in this case, I'll definitely be looking for a reversal to the downside because the 0.618 golden ratio has been broken. One more thing I want to go through before I end off this video is to change to the line chart. Let's say you are new and you cannot identify that this is a swing low and this is a swing high. Okay, what you want to do is you just want to switch to the line chart. Take the levels. Okay, just map it something like that. Okay, map it something like that. Change back to the line chart and you can see, okay, so this is the low and this is high, and then you draw it like this. So this is how you can use the Dow theory. Okay, it's a very powerful concept that no one teaches. Okay, it's something that costs us a lot of money, but I really hope you appreciate it, you really apply it, because there's no point in watching this video, us giving you all this value if you do not apply it. Okay, so if you have any questions, just let us know. So I just want to recap today's video and then I'll just end off. Okay, so in today's video, I shared with you why you need to learn trend reversals, even if you do not intend to trade counter trend, because when you are trying to trade you are trying to time your entries. Let's say you are trying to trade with the trend and there's a retracement. You are trying to wait for that counter trend retracement to resume back into its trend. So you are still waiting for a trend reversal in that sense. Then I share with you the strategy number one, which is a break of structure. If price is in the uptrend, higher high, higher low, lower, making higher high and higher lows, then you want to see that the higher low is broken and there's a change in structure. Okay, the converse is also true for the the opposite, meaning in a sell trade, right? In a bear market, if you're having lower low and lower highs, then you want to see that price makes a higher high. Then I went on into the Dow theory, which is basically using the Fibonacci retracement tool. You want to look at the golden ratio 0.618, 61.8 level. If price is respecting that, then you can reasonably assume that the trend is still intact and you should follow the trend. But if this level is broken, then you want to lean towards the reversal trade, or you want to exit your position or stay out of the trade.